Your mortgage payment keeps going up and you want to know what's really going on, especially because you thought you signed up for a fixed interest rate. I want to explain it to you because a lot of you guys don't know how this works. Stick to the end of the video and you'll get a better understanding of what an escrow account is, what it does, and why you need to really understand that account before you sign on the dotted line. Leg up. This is how it usually happens here of late from what I'm watching. You've signed on your home loan, you signed all your closing papers, you get into the home, and a year or so later, you get a notice from your servicer stating that there's an escrow shortage. And they give you a couple of options. You can either pay a lump sum and keep your payment where it currently is, or they'll take the difference, the shortfall, and divide it over a period of time and add that to your payment. And because a lot of folks get into a home just by the hair of their chinny chin chin, this is devastating. And the first thing that comes to mind is this is a scam because my payment is supposed to be fixed. Well, the taxes and insurance are collected by the servicer, the place in which you make the payment. The reason you received the letter from the servicer is because when they've done their analysis based upon the time that you closed on your home loan, and they have forecasted going into the future by either assessing the true value of your home at a fully tax rate or your insurance premium going up from one year to the next, because they get that information from the insurance company and say, you know what, you're going to fall short based upon what we're currently collecting. That is what's going on, right? And so, just three things to recap there because there's a lot of moving pieces. Number one, the originating lender or your loan officer, which is your loan officer, their company may not be the company that is holding the debt. Number two, the servicer, their job is to collect the taxes for the house, the insurance for the house, and they do it in 1/12 every month. So, as an example, if you're buying new construction and the builder or the builder's lender that originated the loan did not properly calculate your new home at its fully taxed rate so that your closing costs would be a lot less at the time of closing, then you're going to get that surprise when the servicer does the analysis. Now, I want to stop for a minute because a lot of you guys out there think that you have been a victim of fraud. Something nefarious was going on. I want to challenge you, especially you new home buyers that go to these builders and they do it all for you, right? One stop shop. Well, somewhere in your closing disclosure, your closing packet, either a physical package or if they gave you a disc or something online, if you scroll through, you have signed a document stating that your payment can increase because they were estimating your taxes and insurance. Okay. So, this is why on new construction, a lot of folks are blindsided because you're a first time home buyer. You really don't understand how all this works. You just wanted the keys to your home. And congratulations, it's a good thing. And then you get blindsided by an increase in cost. So, I just don't want to point out what's going on. The solution to that is being properly approved and making sure that you ask the lender that you're dealing with, have you given me my payment based on a fully taxed assessment? And they can do that. If they cannot do that, then you should not be doing business with that lender. Period. If you're thinking about going through this process, heck, you might even be in the process. And what I'm saying to you sounds foreign. Stop the presses, go down in the description of this video and schedule a consultation and let me help you out. So, escrow accounts, that's a 10,000-foot view of what an escrow account is and how it works. once you get into the home, that's the starting point. You have to keep up with what's going on in your neighborhood. Are home prices increasing? So if someone puts a house on the market, let's go to pre-existing homes, not new construction here, but say someone is selling a home. What did the home sell for? Because that is a great indication on if there's going to be a new level assessment of what value is based upon comparable homes, comparable age, likeness, so on and so forth. So you need to pay attention to what's going on. Are there any new schools being built? That is a huge as it pertains to taxes because all schools are financed on debt. So if you're in a place that's hustling and bustling and growing and for all the reasons that you wanted to move there, infrastructure, schools, EMS, police, fire departments, all those things, your hospitals, all of these folks are line items on your tax bill. They're called millage rates per milli, per $100,000. These folks have a factor that you, as the new community member, vote on. So we have to start being a part of the process and not just reacting to what happens in the process as if it's nefarious. Hopefully that makes sense because I'd rather you understand these things now before you obligate yourself to hundreds of thousands of dollars, right? We want you to know before you owe. Now, I'm going to flip the script and tell most of you that you need an escrow account. Well, how dare you, Robert? Why would you say I need an escrow account? Well, I'm going to give you three reasons or three ways for you to determine if you need an escrow account. The number one reason is this. If you didn't have if it took every dollar that you had to get into a house, you need an escrow account because that shows me that you don't have any reserves anywhere else. The second reason that you need to have an escrow account is if you're too busy. Some of us are too busy, and it's just what it is. It's not bad, it's not good. It's you got a lot going on. And you don't need one more thing. You're not the person that handles the business. And so you need a set it and forget it. These monies are being collected. It's akin to the federal government snatching their money from your check before you get it. Because if it's left up to you, then you have a huge problem on the back end. So if you're real busy, it's a good thing to have an escrow account. And then lastly, those of you that think, number three, those of you that think that you can invest your money and make all this money off of $2,000-3,000 in a year, and that's why you want to, put your money in a high yield savings account. Once again, look at your current investment portfolio, all right? And if you've done gangbusters with that portfolio, you wouldn't have an escrow account because you would put 20% down and you wouldn't have to have one because you have the ability, you've shown the ability to do so. It's not a knock. I'm just trying to let you know that escrow accounts get a bad reputation and they're not always a bad thing for a lot of people. I want to give you some offense, things that you can do to help limit your taxes and your insurance, the TI portion of the principal, interest, tax, and insurance payment. Number one, you want to challenge your tax assessment every year. County, township, parish. You're going to get a letter saying, we, the tax assessor, are saying that your property is worth X, Y, and Z. And you have a process in which you can challenge that value. And that's really where the rubber meets the road. You want to challenge the value because once the value is established, then the taxing authorities, police, fire, college, road, any special utility district, you might have a water district, all those different millage rates, the ISD, the independent school district. These are the millage rates that they assess and multiply times the value of your home. So you want to challenge your assessment every year. You have to play offensive and you have to contest the value. The second thing that you could do is with your insurance, you have to shop. Get your spreadsheet. You take your current homeowners policy and get your 4 or 5 other people. And here's the thing with insurance that a lot of people don't understand. Don't wait until the renewal. You can shop insurance any time of the year. Most of these insurance companies are going to bundle your auto and your auto insurance. If you don't pay it annually or when it's due, you're going to get charged twice a year. I would recommend you shop your homeowner's insurance twice a year with whoever your top 5 insurers are, and just keep a running spreadsheet every year. Because the deal with insurance is this: the incumbent, the one that is in-house, does not get the rates. It's akin to a lot of you renters. You guys get upset because the new renters coming in, they might get your same apartment or an apartment that's been updated, refreshed, or newer for less than you are in your apartment. Your rent is going up because you're an incumbent. They got you already. Why would they lower the rent? That's not the name of the game. Same thing for us with insurance. So new insurance customers get the benefit. They get the discount. You want to shop that twice a year. And then the third thing I would say is this: ask your servicer to do an escrow analysis. And I would say time it with the auto renewal every 6 months. Give me that escrow analysis, because if you know up front that there might be a shortage, you can better adjust for it. How? Well, a lot of your servicers now, they have online portals where you can make an additional payment to the principal every payment and to your escrow account. I just think if you know up front that there's going to be a shortfall and you have 8 months to go, it's better to prepare. Wealth mindset, remember, proactivity opposed to a poverty mindset, reaction. And so you could prepare for that and you're not blindsided. So if you understand what I'm saying, and if you could connect the dots, a lot of the common denominators here with a lot of this stuff is we want to set it and forget it. I don't know who came up with that, but that's a lie. There's no such thing as set it and forget it when you become an adult. You have to advocate for yourself, because if you don't, somebody will, and it's going to cost you. It's going to cost control, and it's going to hit them pockets. There you have it. Escrow tax assessments, insurance premiums. None of this sounds exciting, but this is exactly the stuff that decides whether your house payment stays predictable or keeps creeping up year after year. Protest your assessment when it's wrong. Shop your insurance every single year and actually read the annual statement from your servicer. Do these 3 things and you're ahead of the vast majority of homeowners. So now you know how to fight back against rising escrow costs and surprise insurance hikes. You're protecting the money going out. But here's the question almost nobody asks: what about the value going up? Because the biggest factor in what your home is worth over the next 10 years isn't even on your property. It's around it. When the city builds a new park down the street, your value climbs and you don't lift a finger. But when they run a highway behind your back fence, the value could go the other way really fast. Those decisions aren't secrets. The city publishes them. You can literally read the plan before you buy. That's our next video. Your neighborhood decides your home value. Here's how to pick a winner. I'll show you exactly where to look and what to look for.